Ranjan, you looked at the role of Robinhood and FOMO, how that played into the markets over the last few years. Easy when there was a lot of enthusiasm and exuberance, but some of those retail investors that got in are learning the hard way what some of those leverage and those names getting in early or at the peak leaves you with.
Yep. Back in March, March 2021, Robinhood announced a new program that was going to give the everyday retail investor access into buying into IPOs in the name of democratizing finance, and it sounded great. But I went through the 20 IPOs that were marketed through this program, the IPO Access Program. They're down 40% from their first day of trading. And more importantly, they're down 61% as of this morning on average from their highs. Because what happened in every single situation, there was a pop. There was either first day of trading or within the first few days, and then a gradual and sometimes brutal decline, which makes sense. It introduced 22 million new users into the IPO process, millions of new buyers, and still a finite amount of shares being offered. Of course, you're going to see that kind of price action. And I think it's a really important thing to remember that as all these new tools were introduced, it completely changed the way a lot of these companies moved, whether it was like Brazilian fintechs like Nubank or Fancy Salad like Sweetgreen, and everything saw that same pattern.
Right. Ranjan, though, to be fair, it wasn't just Robinhood. SoFi introduced this as well. And I should also mention that the NASDAQ is now down nearly 3.5%. We've really seen the selling sort of accelerate in the last few moments.
Yep. So first of all, SoFi has a very similar program to Robinhood. Robinhood kind of came out big with the democratizing finance thing, but I agree. It's introducing this thing that seemed to be this kind of air of exclusivity in the past to an entire new generation of investors. And don't get me wrong, I was here in back December saying that the era of the story stock is over and the crash has already begun. But in 2021, IPOs in aggregate were down 14% 6 months out from when they started trading. That was across all 400 traditional IPOs. Again, Robinhood was down 40% from their first day of trading. So even on a relative basis, they performed a lot worse. But again, it makes sense given the specific mechanics of the program. And today's brutal. It could continue to be brutal, but we have to look at which are the stocks that are more vulnerable to these moves, given the types of money that had rushed into them.
Ranjan, when you look at the damage that has been done, really going back months, and I'm talking about a lot of the losers for 21 on the NAS, the Pelotons, the Chegs, the T-Docs, the Zooms, how much of that is at this point constructive, given that these names are not necessarily going to go to zero?
Yeah, I genuinely believe these moves are constructive in the sense that they're just, in some ways, a reversion to the traditional financial metric means. These are real companies that have real businesses, many of them, and they should be in a good position. But the question is, like in 2021, hodling, buying the dip, these were the terms that kept running through every single segment. But I think capitulation is the word that we have to keep an eye on, because who's going to give, when are they going to give, and how violently are they going to sell? We're seeing it today. We saw it last Friday. As you have the Fed coming in for liftoff and quantitative tightening, it's completely going to change the risk profile of everyone, whether you're sitting at home or you're some big pension fund, and who is going to be buying these stocks and at what level do they come in? Because again, Peloton's still trading at 4.5 times sales, and it's a decelerating business. That's not cheap yet.